Hello traders and welcome on this day the 8th of September, and we're looking at a 3-hour Dow here. And I've got to pull the 3-hour chart up here just to illustrate the sort of environment we've got here at the moment. Here we have this sort of fairly gentle rollover, and as soon as we break down this 460 level here, the big 500 level, then we get this mighty draw to the downside. We recovered a 50%, perfectly normal, and then we just zigzag around this area, and we are getting into a bit of a pinch here. So, but I just called up the 3-hour chart just to illustrate just how sort of a little bit twisted we are at this point here. Not a lot of data this week. First day back for the US, and so I think perhaps tomorrow we will see a push back into this 200 EMA here, at which stage we might just zigzag down again. If we can break that level there, then we are definitely in for another leg. Elliott, let's call that 1, 2, 3, 4, 5, A, B, C, and the D wave is typically the best wave to get into. So keep an eye out for 16,700, and let's see if we can get there and get the next leg down. I want to talk to you at the end of the video just very quickly about an opportunity of how you can actually take advantage of these intra moves, because they're getting more increased volatility. There's increased opportunity in these markets just to make a good daily income at specific times of the day with specific setups. So I'll talk to you about that at the end of the video. But I mean, the first 6-7 months of the year, we were just getting this lot of chop and slop. Now we're getting these better sweeps. We can make more money on this, so we need to sharpen up our skills, be aware of what this market is doing, try and figure this out to get a higher level of predictability into our trading and higher probability and more money. So you can see on the daily Dow we are just coming into the 20 EMA. I talk about the 20 EMA a lot these days, because when you get this sort of knot in moving averages and they spread out, sometimes these markets can, well, quite often, a good bearish market or good trending market will struggle with the 20 EMA. And so, here we have the move, and we are just drifting into the 20 EMA. We're still very low on the MACD. The RSI has been pointing up, but I think as soon as we get to the midline and into these higher levels, I think we could get the next move down. Let's just draw this up in terms of chart patterns, because chart patterns are very, very useful. So there's an interesting chart pattern, as it looks as if we've actually closed narrowly above a trend line with a baseline here. But I don't trust these markets on the upside. I think they are very weak, very heavy, and I'm just looking to short any pushes higher for the next leg down. DAX had a good push higher on a very good trade balance figure that came out today. So let's just not write this market off, because it is difficult to predict. But I mean, for the bulls to really take control of that, the DAX will have to close above 10,400. Now, I'd like to see that. If that's any hope, for me, that's got to close above that tomorrow. Otherwise, that's just a bear flag and a good tumble down. Of course, ideally, you can see that fire line up there at 10,640 would see us come in contact with the 50 EMA. So if you take the fact that this bar here has just closed above a lot of action here, then yeah, we've got a lot of clutter down here that we just closed above. So you have to give credit where credit's due. That DAX is a reasonable close, and we're just narrowly above the 20 EMA, which is always a good sign for me, but it's pretty marginal at the moment. All right, if what I suggest you do is trade half size for counter trend, and to me any push to the upside is counter trend, and then full size on the shorts. So 250 is the mark for if you think that is bullish and you want to try and get a push into 640. No reason why you shouldn't, but just go half size and just be aware that this market is still very volatile. Now this to me is, we've got a sell signal on this US dollar CAD. There's the highs. It's not a convincing sell signal, and we've actually seen this signal before, and the US dollar CAD has ignored it. So I'm just steering clear of this one. What I'm talking about is the fact we've engulfed the previous day's bar. We did it here on the 3rd, and then we closed immediately above it on Friday the 4th, the non-farm payroll. So this is not a healthy chart to engage at the moment. That's the chart pattern. Close above 350, and we could be off to 135 plus. Close underneath this, and we're going to start to trickle down to these moving averages down here on the US dollar CAD. US dollar yen, a very half-hearted effort to hold up. I think if we come in contact with 121, I think that could trigger the next leg down on that one. So yeah, a second push higher, second day of higher close, or higher close in the pound US, and look, it can't close above the 20 EMA. So you can see why I like that moving average so much. Yeah, we're only 100 points off of this major wall here. $155. So it looks to me as if we will get, we've got UK rates on Thursday, UK rate decision on Thursday. Well, if it's still pulling up, then let's look as if we can get to the key pivot on the pound US. So that would mean a pullback to that hammer-like bar there, which will put it at 330. A lot of this move was done overnight in the Asian session because of Asian data, so we need a good pullback on that one. Pound yen had a good day, and you can see as far as the fibs are concerned, yeah, we've still got this 50% at 185.45. So we're under all the moving averages, so we are getting just a sort of a dead cat bounce as far as I'm concerned here, unless we can make some significant higher closes. It is, however, two very, very good days of buying, so I would actually I would still go long this one on a pullback to about 350. Just mark that up. 340 is Friday's open. So let's see if we can get a 90-point pullback and run into that congestion. Pound Aussie dollar actually has a sell signal. We're hanging. We are really, really hanging up there. And it looks as if this is a tough one because this has been such a good chart. There we held that trend line. At the moment we're holding this trend line. So I would not short that because I would want to see a close under 820, 800 for that to be bearish. The commodities did have a good push up today with some stronger Chinese data. Copper did well, gold and oil did well. So commodity pair like the Aussie could well bring this pound Aussie down, but I want more evidence. But it is, on the face of it, a sell signal against a major level of resistance. 221 is a big wall for that pound. Right, just as we talked about how sort of awkward the Dow has become to trade because of the sort of volatility and the scattiness almost of this one. Well, that's a pretty untidy chart to me. I mean, there is some clarity in the way in which it did a three-wave push on that one. Instantly sold on that resistance level. So we're in an apex. We're in a big apex on this one. Closed above the 3 of the 4 moving averages, in fact. So we are actually in a position where we only got the 200 EMA above us. So seeing some strength in that one, and that actually to me is bearish for the indices, because a strong pair like the euro, which is effectively, you know, a carry trade partner, is not healthy. It shows the appetite for risk is diminished. So keep an eye on that one. It'd be great if we could roll over. And there's certainly, if you look at the barrier here, there's certainly a huge barrier there that we're struggling against. In fact, let me get rid of this one up here. It's just so another push into 290. We're currently just over 200. Could be the place to get short on that one. I think we could even, yes, there's a lot pinpointing that area, especially that 200 EMA. So I will keep track of that one. Euro yen. Nice close up. So it's the pound yen once more that has got me interested. I'm looking for a pullback in that one. We didn't look at oil, did we? So let's look at oil. You know what? It's got the look of a chart that could easily hold here and push higher into 55. This is one of our stocks from Traders Roundtable. Kemp, that's a nice close. I'm actually in this. I bid at 34. Am I in this? I have to check my account. What did I put in for this? Hang on. That's actually pulled back right on the point on which I had a bid. So it's possible I'm not in this. So I need to check my account. If I'm not in this, I'll bid at 35.10. But this is a nice chart, a good call from our member, one of our members who put this in the room. Traders Roundtable. So 1, 2, 3, 4, 5. A, B, C, D wave was the impulse wave. Now we've had so 1, 2, 3, 4, 5. A, B, C. Let's see. Yeah, it's worth a shot. Just don't put your house on it. That's all. Yeah, respect leverage. Right, let's look at the other ones. Zyop, that's pushed higher, but into the 20 and 200. The other ones are NVEX. Novavax. That's a hammer on the 100 EMA, so I'm liking that one. So if you're interested in that one, I would bid about 10.52. Right, other ones. This is a longer term one. Yeah, I'm looking for a gap fill on this one, on POT, P-O-T, so that's just going to stay on the watch list. Ooh, that's a big push through in a housing stock called Lena. That's a very big push, so I'm going to wait. I'm going to alarm that gap fill. 53, at which point I would consider a short. Okay, so yeah, these housing stocks are pushing up, so I'm going to let them push up, let them fill some of those gaps after that big leg down, and then start to think about shorting on that rebound. Let's have a look at BZH, Visa Homes. Yeah, see that's opened at, that's gapped up at 1735 and closed down. Very weak chart. Let's look at the now oil stocks. I would imagine the oil stocks to be doing okay. This is rig. Yeah. Not a great chart to trade. Would I trade that? There's a divergence down there. I think it's worth a shot. I would 1360. I think that's well worth a shot. PTE Patterson. Let me just go to my list. Patterson is sideways, but trying to do something here. And the other one was COP. That's hammer on the 20 EMA, so that's looking healthier. And Chevron struggling. So again on Conoco, I think I would bid at 47.65. Yeah, I'm going to risk a small position on that one. So it's going to have to be 47.50. Right. So on the events, scalper. Okay, and so I'm just finishing the video now, and this is the scalper school. We are going to be next week. We have the rate decision on in the US. This is going to be very bumpy, very volatile, which could be a terrific opportunity. So what I'm doing is on Monday, I'm starting the scalper school, and it's going to be 2 sessions, 2 training sessions, and 3 live training sessions. In fact, I would probably make that. I've got so much to go through, and because I want to make sure it's all drummed in, I'll probably convert that to 3. Well, in other words, what I'll do is before each trading session, there will be a revision of the modules. There'll be at least two long, intensive sessions on scalping, and we'll be looking at 3 setups you need to know inside and out, and we're going to do some simulated trading to make sure that I can see that you're doing that, because you're going to be trading that, not me. Of course, that will be after we've gone through the preparation, the chart setup, the scorecard, the checklist, how to plan not just before the session but actually during. So while you've got volatility in the markets, as the markets are open and getting underway, sometimes you need to just review where the markets are, and so you can make the most of the move. You're not trying to get every move. That's not the object of the game. The object is to make money, close your screens, and walk away. So it's about be at your screens less but make more money. And we're going to be looking at the key measuring tools that the algos use, the algorithms, which algorithms dominate the markets now. Yeah, in other words, computers monitoring what's going on in markets and firing off huge volumes of entries and exits at incredible speeds. Okay, so there'll be a module handbook, there'll be a check sheet, a journal, and you also got the offer of a session sometime within the next couple of weeks after the course for anything you want to go through or refine with me and discuss. There's the booking there, so you go to the registration sheet, fill that in, get enrolled, and off we go. I mean, the cost, let me just go through the cost. It's 195 for non-members, 125 for members. So if you want, one thing you could do, and I'm quite happy to do this, is if you want to join as a member, there's 2 levels of membership. It's 47 a month and 97 a month. 97 a month is the full Skype room and the full scope of the videos. The 47 a month is a reduced membership, which doesn't include the trading room. Okay, if you want to do that for a month, then you can have the discount. I think that's it. So let me know what you think. Book up and let's get going. And we're going to have a lot of fun. You make more, you should make a good 2 or 3 times the fee, at least, depending on the size of your account. We're going to have a lot of fun, and we can keep, for those of you who come on the course, I will keep updating you with scalper techniques if the markets are shifting any as the months unroll. All right, hope that helps and look forward to seeing you.